Today, I am going to talk about, let me see if I can share my screen. I am going to talk about FIRST, but I wanted to highlight a couple of things before we get into the first changes. The first one is we've revamped the financial management reviews. We used to go on site, if you think way back, so to my predecessors, Tom Camby and then Rita, we did these financial management reviews that were on site. Loosely, they were for districts who were struggling financially. There was some terminology for those, but we don't really use that anymore. And so we revamped them since the pandemic. We're not going on site unless we see something that was really extreme. Most of these are all desk reviews, and they're more targeted at just certain things. We use a risk assessment, and so we use your FIRST scores. There's certain FIRST indicators that we're using, findings from auditors, and then any other critical issues that have been identified from maybe other parts of the agency or just from legislators or other members of the public. We do have a separate investigations group that does investigations. So these aren't investigations. They really are just a financial management review that we work with the districts on and charter schools if they meet certain criteria in our risk assessment. And then the process is we'll notify you, we'll ask for information, and then based on that information, we'll have conversations with at least the business manager, CFO, comptroller, so accounting office folks. It may extend beyond that, but we'll identify the people that we'd like to talk to. Then we'll issue a preliminary report, and we'll ask for you to respond to certain things, and then we'll issue a final based on the LEA's response. And so that's something that's picking up a little bit of steam. We're starting to try to process some more of those. You can see that we'd like to do 30 of them a year if our risk assessment lends to having 30 districts and charters looked at. If not, then we would do less. But I don't have that many staff, so they're also working on other things. So getting to 30 may be a little bit difficult with the number of staff I have. Quickly, in the Financial Accountability System Resource Guide, we updated this in the fall, and some of the big changes, hopefully you're aware of. The pre-K, this page just shows what the modules are. There's only 6. A few years ago, we cut it from 11. The change document, I'm not gonna go through it today. In previous presentations that I was doing, I would spend some time going through the actual change document. But a quick overview of this change document. It's something that we started last time, but we've improved on it this time. We created a change document for the Student Attendance Accounting Handbook, which has seemed to be very helpful for people. And so we're trying to do the same for FASRAG. FASRAG's bigger than the Student Attendance Accounting Handbook. The change document itself is over 100 pages. And what it does is it highlights all the changes that we've made throughout all of the modules. And so when you look at it, if some information was in a specific module, you can just scroll to that module. If you don't know, you can always control F, do some kind of find function, or you can scroll through it. And so as you're working with FASRAG, that might be a helpful document for you to use. And then of course, everything else is still there and available as well. Those changes, pre-K program intent codes, probably most of y'all's shock would have come when we initially rolled this out, and for your 23 budgets, the program intent codes for pre-K were no longer available. So that should have been your first clue, other than hearing me talk about us eliminating the pre-K PIC codes. And then we also sent out a TAA to try to help communicate that. was surprised that we were so successful in getting them updated so quickly in PEMS, but we did. So that was good for the agency. Updated fund codes. I'm not gonna spend any time on that. You guys are well aware of all the ESSER fund codes that have been created and you're utilizing them. So I don't have much to add about that anymore. GASB 87, you guys implemented this and started submitting this information to us in your audits for 22. Now we're into GASB 96, which is for the ASPIDAs, which are subscription-based internet technology assets. The highlight of it is the accounting treatment is about the same as it is for leases, so GASB 87. So at least we're not having to rethink about the accounting side, like how are you going to account for an asset that used to be short-term, now it's going to be a long-term asset. All of that has been set aside and is the same as the leases. What is new are the account codes. We created some new object codes to account for it. And that's in the change document, also in FASRAG. So this is just a quick mapping. If you didn't see, the pre-K 32, 34, and 35 were all eliminated, and we moved them into their regular, I put in quotes, picks, or their corresponding picks. So 32 was just the regular pre-K, so that got moved into, those costs will all be moved to pick 11. 34, which is comp ed, will be moved to pick 24, and then pick 35, which was bilingual, will be moved into pick 25. The one pre-K pick that we did not touch and still remains active is pick 33. You will continue to use this one. We didn't mess with it. It feeds into MOE calculations, and so we didn't want to disrupt that calculation by moving the pre-K special education services into pick 23. So we just decided to keep that one as a standalone pre-K pick. And then as you're processing your 23, if you see that you have any of these, you're utilizing the pre-K picks, make sure before you submit your PEMS next January, so your mid-years, that you map them or move them over into those pick 11, 24, and 25, because it will be kicked back as a fable. Interesting. There. All right. Subscription-based information technology arrangements, GASB 96. Basically is looking at your subscriptions for information technology software in combination with any tangible assets, and then specified in the contract for a period of time in exchange or exchange-like transactions. That's a lot of accounting mumbo jumbo. Basically, the examples are Zoom or Teams. So at the agency, we use Teams a lot. So this is one of those platforms that would be included in this GASB 96. Accounting treatment, your cloud-based storage. So if you're using OneDrive, that would be included. And then the environment for any software development. So if you're developing some of your own software, but you've got a behind the scenes program that helps you do software development, then that perhaps will be rolled into GASB 96. It's effective for years after June 15th, 2022. So we're in it. You do have to present it separately from leases, and that's, we have account codes set up for that, and then it's implemented in different stages. And then your training cost should be expensed when incurred, so you're not having to roll those up into the long-term asset and liability. So this is just kind of a quick snapshot of when you're looking at what is included in the stages of implementing your ASPIDA. So all the preliminary work gets expensed when it's incurred. The initial implementation, you're going to capitalize that as an asset, and then the ongoing operation and additional implementation will generally be expensed. But if there's some significant changes to it, or you have some additional implementation that you've had to do, then that work is probably going to have to be capitalized. Remember, for GASB 87 and now for GASB 96, we created account codes that can be used with function 71, but we've also tried to be able to map those specific account codes, object codes, with function 71 and allow for those things to be used in your federal programs, in your special education MOE calculation. And then I just had a conversation with state funding earlier this week. We're also working on making sure that some of those costs are captured if you're doing transportation reporting and say you lease your buses. So if you're leasing your buses, generally those are going to be a long-term lease, so longer than a year. If it's less than a year, you're going to have some rollovers that automatically kick in or are hard for it would take an agreement from both parties to be able to extend it. So those would probably be considered a long-term lease, and so you'd have to capitalize it and then amortize it. And so for those, we're working with transportation handbook to include those costs. But it's like what we did with federal programs and the PICs, it's going to only be those combinations. So it's going to have to be function 71 and then the PIC codes or the object codes that we created to go with that for the right to use assets or the SPIDAs. All right, we're moving quickly. Program intent codes and audit compliance. The big takeaway from this part is the agency will be sending out notifications later. We're running the 3-year look at right now for 22, 21, and 20. And we're going to send out notifications, and all it is letting you know you're identified as not spending up to the statutorily required amounts. We're not asking for anything. All we're asking for is you're aware of the amounts and you'll try to make up the difference in the next year. And this will be something that we'll continue to monitor and send out. And eventually we will do more types of reviews on these, but right now we're working on just getting y'all up to the spending requirements. And then we'll start doing more. And so we ran some high level stuff, and that's what I'll show you on the next couple of slides. This may look familiar. I've showed y'all this template before, and it's a template I can send you if you want. TASBO actually has a link where you can just put in your county district number, and it will populate this for you, this spreadsheet, and it'll tell you, which ones that you may be out of compliance. Al and Amanda and I worked closely on this, and when we make updates to how we're calculating the programs, we communicate with them as well. I have not gone out there to compare their numbers to the numbers that TEA is actually pulling. Obviously, theirs is going to be an estimate that you can use, a template to be used for planning purposes. But the TA one would be the official calculation that we're basing our compliance reviews on. And then just a few things that I wanted to point out. We're using specific summary of finance runs because we've made adjustments to state funding the last few years. And so we have specific run IDs that we're wanting to use for our compliance testing. And then along those same lines, I try to remember to tell y'all every time, we use allocated expenditure. So once your PIC 99 org 999 gets allocated out to the program intent, other program intent codes, we use those expenditures. And then not only that, we're also combining the ESSER grants in with our compliance testing. So 266, 281, 282, and 283. That gets included whenever we're looking at our compliance reviews. And then, the idea is that we'll continue to use the ESSER grants until they run out. So we're looking at a 24-25 fiscal year when those ESSER funds will be running out, and we'll start rolling them off at that point in time. So as you're planning for out years, be thinking about, as you use up your ESSER funds, you're gonna have to shift some of those expenditures back into the regular program intent codes with a general fund expenditure. Then the bottom portion is these are numbers that we ran based on 21, 20, and 19. And then the other question, probably most of you are asking if you've already read through them, why is TA using a 50% mark for SCE or bilingual or CTE? Their requirements are 55%. This was just to kind of give us a ballpark, like where are we at in the state. We haven't run them officially for a number of years, and so especially we haven't publicly talked about running them and reflecting on what those spend requirements look like. And so this was just us wanting to ballpark it, be somewhat flexibility. When you actually receive, if you receive a letter from us, it's going to be at the cutoff. So 55% for those are 55, and then your early ed dyslexia, those are all 100, and then CCMR will be 55%. So you can see if we just looked at comp ed alone, 65 districts spent less than 50% of their comp ed funds utilizing the comp ed picks. So those 65 will for sure get a letter from us encouraging them. I'll go strongly encouraging them to really work on increasing that spending for those kids that are in need of those comp ed services. And then the bilingual ESL is, we marked it at 50% as well, just take that ballpark figure. That one had 110 districts that didn't spend up to the 50%. So that one may take some more work to get up to the minimum spending requirement. And then which there, by the way, I've seen several bills, and I'm sure Josh and Amy have as well, over just including different types of bilingual changes. So the legislator is monitoring the bilingual program for sure, and making suggestions to changing it. The CTE was also 32, had spent 50% or less. And then the early ed, this one was over a 2-year period when we looked at it, and that one had about 155 that had spent 75%. So we gave a bigger ballpark of folks on that one. So that 155 is only going to go up from there. And then dyslexia, 156. That's also a 2-year look, not our traditional 3 years. And then CCMR at 243. On CCMR, this one I know is a difficult one for you guys to figure out what amount you're getting, and then how you're going to spend those funds. And so I think this one will take some work from both agency side and district side on how we can get together to make sure that we're spending the funds on the kids that generate it and that need the services offered by the CCMR. But I think that's a much longer conversation than what we've got for today. And last point on this slide, you could be a district that is in every single one of these spending categories. So we took them in silos. We didn't look at, well, if you're in comp ed, then you may, you weren't included in bilingual if you had already were short. So you could be included in all of these. So potentially we're going to have districts in all of those categories. The one that I didn't include on here was special education. And we're doing some additional processing for SPED because it's got some other requirements for IDEA and MOE. So we're looking at that one a little differently. And then I needed to highlight dyslexia. We're using both dyslexia spin code program intent codes for our state compliance. Remember, for special education MOE, they're only using 43. And then this was another way to look at it. I'm not going to spend any time other than just to give you a second to look at that. And what it's doing is showing you at the levels of where that's spending, how close it is to that spending amount. All right, updates on FIRST. It's true. FIRST just went through public comment where it's out of the comment period. So now we're processing the public comments that we received. We received a few, not a ton, which from an agency perspective, and a work perspective, I guess that's okay. I don't take it one way or another. I mean, people are busy. They don't always have time to go out and review the rules that we're trying to establish. So, but we did get some comments from some associations and then also from a few districts. And so we're processing those comments right now. But I wanted to show just kind of a 4-year look. And I did this slide at TASBO. I don't know if we have any charters in the meeting. If you are, you can just throw something in the chat to let me know, because I did something a little different than what I've done in the past for FIRST. I embedded the charter indicators in with the school district indicators. I spent an hour on just going through FIRST slides. I'm not going to do that today. I know that we're kind of running behind, so I'll go through a little faster. But if there are charters, I would like to at least highlight that so that I'm not leaving them out in the conversation. And
David, David, this is Romalda. We do have Vanguard Academy.
Okay.
I mean, so they are here in person.
Okay, good. Thank you. So we do have a charter. So partly I did it because I wanted the school districts to see what the charter, how charters are being, their indicators, what they look like. There's some differences between charters and school districts, of course. The biggest is from an accounting perspective, charters use FASB, ISDs use GASB. And then from a funding perspective, charters receive all their funding from the state, and then school districts, it's a mix of local and state. And that's what creates some of the differences between charter and ISDs. And I had a couple of comments about why charters get something one way and ISDs have to do it another way. So we'll be replying to those comments. Anything else on this slide? Overall, you can see, especially these last couple of years where we've had the pandemic, its districts and charters have remained fairly consistent. I think that's positive coming out of the pandemic, that kind of weathering the storm and from a FIRST perspective didn't take a big hit. So, but outside of just first indicators, everything else you guys can opine on, but I will not.
David,
We still, yeah.
I don't know if you're gonna mention it, but I did pick up at the TASBO conference that you said that you recommended for districts and charters to appeal if there was something in their first preliminary rating that they were not comfortable with, that you recommended that they appeal just in case something may have missed. Did I understand correctly?
Yeah, I will. There's a slide that kind of triggers that thought,
Sorry.
but and when I get to it, I'll highlight it for you because yes, it's true. You can appeal anything. The rules read the rules make it sound like it's more restrictive, but really you can appeal any indicator and when I get to it, I'll start going through that. Hopefully I don't spend as long though, because I spent 15 minutes on one slide during TASBO, and so that would really push Sarah way back. You guys would be eating your fingernails for lunch at that point. So I'll go through them quickly. I'm not going to spend as much time on them, but I do need to spend some time on number one. So timely filing of AFR and data feed. So you'll see why I spent some time on that. And then the other criticals is number two is unmodified opinion, the monetary default on debt, timely payments to governmental entities. So that's your TRS and IRS, TWC. And then indicator number 5, we do have a proposed change that I will highlight, and that's for the ISD side. All right, so this indicator, we've had it forever, and it's, did you submit your audit on time? And really, there's 2 on times. The statutory requirement is that you submit it 150 days after your fiscal year end. So that's November 27th or January 28th. But from first purposes, we've given you an additional 30-day period. A question that I get quite a bit is, what happens if I don't get it in by the January 28th deadline or the November 27th deadline? Is there any penalties? Well, there are a couple of things that happen. You will receive a letter from my side, so Paul Moreno and his team, they do the financial reviews of your AFRs, and they're going to say you didn't meet the statutory deadline. So that's going to be one paragraph you get in a letter because they're using the TEC 44.008. That also, though, goes up to federal programs, and part of their risk assessment is the submission date and did you meet that statutory requirement. So that goes on their risk assessment as some kind of check mark or a mark on their risk assessment that you didn't meet the statutory deadline for that. Oh, you can hardly see it. Shoot, I needed to reformat that slide. I apologize. Down at the very bottom, you can see how districts and charters fared this past year. So 1,016 ISDs and 172 charters passed this particular indicator. So we're doing something different. We did put it in the rule packet, and we may have gotten one comment on it. So I find it interesting because from my perspective, I've been the director for 10 years. We've had this indicator the entire time. It's not an indicator that a lot of times in an appeal gets overturned. Just from, it's really, did you get your audit in or did you not? And that's really, it's very kind of cut and dry, except for the 21 audits. If you remember, we did offer an extension for the June 30s, and then we offered just a tiny extension for the August 31s because of the pandemic, and then because of Winter Storm Uri. But we are doing something completely different, and this is what I spent 15 minutes talking about. I'm not going to do that today. about submitting an appeal and the importance of submitting an appeal specifically for this indicator. So what we proposed was you let's say you submitted your AFR on January 10th. It came in, and what you submitted to us was 3 pages. When we go back and review that, I have a team that tries to do a preliminary initial review of all 1,200 AFRs within a very quick turnaround. And we're just looking at very high level things, basically doing a completeness check and making sure that there's no student information, bank information before we push the button to be able to post it online for everybody to see. If we identify those, we'll notify you and tell you, hey, by the way, you didn't submit a complete audit report to us. Can you please submit another one to us, and then try to get it in before the deadline. There's times when we're not able to catch it. We send the email to an email address that maybe is not monitored. A whole host of things happen. So let's say you were in that situation. You submitted your audit, you thought it was great. You sent it through January 10th. We don't pick it up and actually look at it until February 28th. Well, now you just missed that 30-day deadline, because we're going to look at your audit and we're going to look for certificate of the board. Is it signed and dated? Has all the both signatures, president, secretary? Did you mark approved or you disagreed with it? We're going to look at your audit opinion letter, and did it have the auditor's signature on it and it's dated? And then we'll look at the audit opinions at the back of the audit, and were those there? And then we just do a general completeness check just to see if everything was there. So we do that, but when we open it, there's only 3 pages. Well, that's an incomplete audit to us. So we ask you to submit a new one, but that also would create a fail in first because we don't have a complete audit. So in this case, you're that district. January 10th, you submitted it. You didn't go back and check it. We didn't catch it. So now that's a fail. If you're in that situation, what this rule is proposing to do is, one, you have to appeal. Like, if you don't appeal, this part doesn't even come into play for being able to overturn that appeal. And so let's say that you are a district, now you appealed it. What happens? Well, we're going to want to see that your correct AFR was signed before the statutory deadline. So remember, that's key. Statutory deadline is not the first deadline. Statutory is the 150 days. So was your audit signed before then? Was your board meeting, and did your board approve it before the 150 days? Those things are correct. Then you get into the 3 bullet points with Roman numeral 1, 2, and 3, or little i's, whatever your preference is on how you want to talk about those as numbers. The first one is, depending on your first rating, you'll be deducted 15 points. So we're saying, yes, it was late. There wasn't a completeness check to make sure that the AFR was complete after you turned it in. And so it became a fail, and then now we're overturning it. So you're going to lose 15 points, or all the way down to a 70 if you're under that. And the number 2, if you have a preliminary first rating from a 70 to an 84, so you have a fail right now because the audit report wasn't submitted on time, but through the appeals, you provided that information to us, and say you scored an 84, the maximum score you would be able to get is a 70. So you're passing, but it's still a low score. And then for number 3, that basically says if you failed for other reasons, even with this this critical indicator also making you fail, you just fail because it's the lowest grade. So
David, also, since I'm already unmuted, we do have two other charters, listening Triumph schools and Harmony schools.
okay, well, this applies to everybody. So we haven't distinguished between charters and ISDs yet. That actually gets more, well, indicator 5, because that's an accounting one. And then some of the other indicators, there's some terminology changes, but I'll highlight those when we go through them, so that we can capture all of those changes. So this was the one that where I talked about appealing and making sure that you appeal. There's been other indicators in the past that folks have appealed and we've overturned. And so that was kind of one of my something that I spent some time talking about is if you don't appeal, then you don't have an opportunity for it to be changed. So it takes a little work to get the appeal submitted. It takes a lot of work on the agency side, and you know, my appeals panel, they're all independent from TEA, and they in fact actually review the appeals separately on their own, and then give us back their feedback on which ones they think should be granted. But what the appeals panel is basing it on, the rule says this is what the calculation's doing. Does the appeal fit within the rule and the calculation to be able to be overturned? So that's how they look at it. And then after the appeals panel, me and my team, and then my supervisors meet with commissioner, and we have a discussion about the appeals panel decisions, and then what the agency wants to do. So we take all of that in consideration and then make our decisions based on that. Let's see. I didn't get any public comments on this one. This was just unmodified opinion. There isn't really a lot to this one. If y'all remember, we moved the material weakness portion down to its own indicator, and then at the bottom you can see how folks do on that one. So 1,018 ISDs and 174 charters passed. And then on this one, were you in compliance with all of your payment terms of your debt agreements at fiscal year end? Another one where all the ISDs passed, and then one charter tripped up, but I think they also tripped up on the TRS one. Oh, another one of these I didn't catch. So on this one, remember, we're comparing, we're looking at the warrant holds that the comptroller issues, and then we also look in your audit report to see if your auditor flagged where you may have missed a payment or you had a late payment to the IRS after one of your quarterly tax filings. I think last go around for rulemaking, we changed this and added in the 30 days for IRS as well. There were a few school districts and charters that failed this one in years past because the IRS one was not clearly in line with the 30 days, and so we thought that we needed to provide that for everybody. Just briefly, a warrant hold is issued from the comptroller when something I just learned recently, recently in the last few years, that if you don't make your payments to TRS, they'll issue a warrant hold. Or and this is the part I didn't know, if you misreport, so you made a payment but you messed up the reporting side, they'll also issue a warrant hold for that as well. And in fact, we had a district who failed. They were making payments, but they were missing some reports, or they weren't reporting correctly. And so they had a warrant hold issued, and that went on for more than 30 days. And so they actually failed this indicator because of the reporting part, and TRS issued a warrant hold based on the misreporting or not reporting everything correctly. So as you're doing your reports to TRS, make sure that you're doing the best you can. And if you have questions, reach out to them to make sure that you're reporting everything that you should be. Okay, indicator 5. So for the charter schools, we aren't making any changes to it yet. We did get a public comment that suggested that, well, I'll just skip to the next slide, that suggested that we do something similar for them, that we're doing for the ISDs internally. The agency's processing that. Is that something that we want to do, or do we feel like it's still an accurate indicator for charter schools without doing that? And so, but one thing that you're going to see, the different accounting. So FASB versus GASB can't be more highlighted than it is for this particular indicator. What you see is the ISD side, because this is where we put in our proposed change. So years past, we paused this indicator because of GASB 68. Man, that sounds like a long time ago. GASB 75, so you think of NPL, so net pension liability, OPEB, other post-employment benefits. We tried removing those things, and there was just, it was creating too many fails based on a non-cash liability. I'll say, just simplistically, that's what it is. Because if you had enough money and you wanted to pay off your portion of the state's liability for NPL or OPEB, you couldn't do it. You would submit the payment, and all that would happen was TRS would process the payment, but it would lower everybody's by a fraction of an amount, and you would still have a liability. So that's what I mean by a non-cash liability. So if you remember, I tried to solicit some feedback on what are some other government-wide type of analysis can we do using net position. I didn't get a lot of feedback in the agency. We did some research on them, and I didn't really like them. So what me and my team came up with was a revamp of that particular calculation. And so we're now going to use total net position. So you can see we've taken out unrestricted. It used to be unrestricted, and now it's total net position. We're still going to back out the accretion for your cabs, NPL, and other post-employment benefits. And then, is that greater than 0? So that part is the same. So if it's yes, no problem, you passed. If not, then we look at your score and if you are growth. So now we're thinking about, you have a lot of students, you've had to build a lot of buildings, you're taking on debt to be able to house all of those students. So we're looking at growth. Probably most of you remember when it was at 10%. Now we're down to 7% growth, which is a little over 1% a year. And so as we look at that percentage, that will also look at your score. But if we back up, so if you remember, if it was greater than, if you had less than 0, that would have been a fail unless you had a growth. And then if you had a growth, then you would have passed. Now what we're doing is, if you have 0 and you don't meet the growth, you'll score a C. However, if you meet it, if you pass it because of the growth, then you're going to score B. That'll be your maximum score. And so those are the changes we made. So it's no longer critical. We're giving you points if you meet the growth criteria. And then we actually just had we had 3 public comments I believe, to talk about maybe not just having a percentage, but an actual number of students. I think this comes from probably some of the larger districts where 7% growth. If we took 100,000 student district, their 7% growth is 7,000 kids. And you know, especially now that that's kind of a high mark to meet. And so one of those comments was suggesting we use a fixed student amount. So it would be percentage growth or whatever number of students, 2,000 students. And then that would be the other growth part. So that's one of the comments that within the agency, you know, we're thinking about and considering making a change for. And then from the charter side, we did get a comment about this particular indicator for the charters, just trying to align it more like the school districts. And so at the agency, we're also analyzing and thinking about that one as well. Then we move into solvency indicators. Oh my gosh. Sorry, I just looked at my watch, 11:10. So Sarah should probably be on unless y'all pinged her. No changes to this one. We're just looking at your 3-year fund balance, or for the charters, their net position. And we are using assigned and unassigned fund balance. And if they had a 25% decrease or less, then you pass this one. If it was greater than that over the 3 years, then we will look at your current year assigned and unassigned fund balance and see if it exceeds 75 days of operational expenditures. And then remember, for operational expenditures from ISD side, we back out function 81. For charters, we back out depreciation expense. So that gets you to your operational expenditures. And then this was a ceiling indicator. Number of days of cash on hand. We didn't make any changes to it. And you can see 988 ISDs had at least 60 days or more of cash on hand. This was a comment that we received because the charters have a lower number of days requirement of cash on hand. The main reason why charters and ISDs have different days of cash on hand requirement was charters receive 12 equal payments from the state. They're paid monthly. They also start reporting their attendance after the first 6 weeks. And so we start getting more accurate attendance information. It's not a complete mid-year or summer PEEM submission, but it's enough information for us to be able to make some adjustments to the charters, their attendance, to be able to switch them over to I'll say actual. The charters may disagree with me that are on here, but that's really why there's the discrepancy. Districts have collect more cash and then have to have those reserves in some of those months where they're not receiving anything from the agency or the state. Indicator 8, current assets to current liabilities. We didn't make any changes to this. And then once again, it's just somewhat difference of accounting, difference of the timing of their assets and liabilities from a ISD and a charter side. So once again, it's just, that's why there's a difference between them. And let's see, total revenues to expenditures. We didn't make any changes to this one. You can see that 1,008 districts passed this one and 170 charters. So that's like 98% of all LEAs who passed this one. There is a little bit of a calculation. If you have your expenditures remember we back out, it's kind of, I should say the operational expenditures in there. Because we back out the facility acquisition, construction, so function 81 from ISDs, and then for the charters, the depreciation to get to an expenditure amount. So once you back that out, if your expenditure still exceeds your revenues, then we look at how you did on days of cash on hand. And if you are an ISD, if you had 60 days of cash on hand or greater, then you pass this one, and then 40 for the charters. All right. This calculation and the information we use is basically the same for both ISDs and charters. We use your operating account, so 199, 420. There's a 10% variance up or down, and it's based on your budgeted revenues compared to your actual revenues. Remember, your budget revenues are the we capture from fall snapshot. And then for object codes, 57 and 58 series. So those are your local and state. We don't use any federal. We actually paused this indicator last go around, and I believe we are pausing this indicator again, if I remember correctly. Hopefully I didn't get too far over my skis, but I think we're pausing this indicator again because of we're including some of the pandemic. We're still like in those pandemic years when federal revenue, state revenue, local revenue was all kind of up in the air, and you know, there was the different state aid or the state responses with how the federal money flowed and the state money flowed. So right now I think we're still pausing this one because of those years that are impacted by the pandemic. Long-term assets to total, or long-term liabilities to total asset ratio. This does have that growth in there as well, the 7%. So we would be considering making a change to this one as well, to add in that student number. And then the charters have a little bit of a different change for theirs because of new charters coming online, and so we look at their growth slightly different. All right, so this one is for ISDs only. This was a newer indicator, and we're comparing your assessed property values compared to your long-term debt. We received a comment on this one because some districts felt like this was, the terminology was making it difficult for some boards to understand. In particular, we said sufficient. So we're actually looking at revamping, not the calculation itself, but the question. So we may end up, it's going to be the same calculation, but a tweaked question so that it's not using the word sufficient. That way, if you're a district and you scored 8 points, well, it's still sufficient, but it's not, they would look at it as, well, you guys know, anything less than 10 is a fail. So when that wasn't the agency's, what we were trying to communicate through this indicator. So we're working on revamping that. The other change that the agency is looking at, we were using your M&O rates from the J1 that you submitted in the AFR. We are now pulling, or going to pull your INS value. And we just, within the agency, between us and state funding and Sarah's team, we need to figure out which of the, what INS value we want to use. And so that's something that internally we're working on, but we've put into rule already. We just need to determine the one that we're going to use for that. And then we do use PEMS Fund 599 for debt service for your local and total revenues, so that we can make that additional calculation, which is that, but we spent time on that last time. Okay, charters only. So charters have another debt service coverage ratio sufficient to meet their debt required. They scored 6 points or more, or 170 scored 6 points or more, and it was worth 10 points. This was the one that, if you remember from the school district side, that we kept making modifications to it year after year, because we weren't capturing the information. And so we actually abandoned it and went to the one that we just talked about. But the charters, it still worked for the charter school accounting side. And so we used it to, we used it for the charters because it was applicable to them. Okay, so now we're moving into some where you'll see a different alignment for the charters and the ISDs. This one in particular, so administrative cost ratio. There's the indicator 13 for ISDs, 14 for charters. Generally the same. The ranges are a little bit different because just from a economies of scale perspective, charters and ISDs are set up differently to operate, and so there's a difference in the ranges from that standpoint. But calculation wise, it's all the same. And then on this one, and we're going to continue to do that for the administrative cost ratio, we are including the ESSER funds. So just like for state compliance, we're also using the ESSER funds in this calculation so that we're getting a more accurate calculation. Because if you moved off all of your math teachers into ESSER 1 or now ESSER 2, that would throw off the calculation because we're using function 11 as the denominator. And so we felt like it was a better measure if we also included the ESSER funds, and partly they also have that very broad allowability that you can use those ESSER funds for. So we are including that. And then these are the ranges. This is charters only. So when the ISD got a new debt calculation, we also gave charters another debt calculation. This is one that the rating companies used for them. And so we felt like it was a good calculation, and 172 passed. So you can see that it's they're doing well on this one. Student to staff ratio. This one was interesting because it's the same measurement for both, because we're starting to roll into using ESSER funds, and then we've also started to see House Bill 4545 creep in, and you're talking about bringing in additional teachers for tutors for those kids who need the accelerated instruction because of not doing well on the STAR exam. And so bringing in those additional supports, that's maybe causing some districts or charters to bring in additional staff. And so that may or may not have an impact on this. That partly depends on how they're reflected. But so and then with ESSER and the way that ESSER was flowing, and then where your student enrollment was this past year to 3 years ago. So we're monitoring this one to see if it's one that we actually may need to do something with, just because of ESSER and House Bill 4545. But overall, you can see that most districts and charters pass. Then we move into the financial competency indicators. This is the ISD side for pupil projections. You use your biennial pupil projections to compare to your, and then we compare that with your actual daily attendance from mid-year. And based on the size of your district, you get a variance of that amount in the table. And if you're within that variance, then you pass. If you fall out of that, then you would fail. This one was paused because of the pandemic, and we are discussing if it needs to be paused again as we are almost moved out of the pandemic, but we're still having discussions within TEA of whether or not we need to pause this again for another year. So from the charter side, the charters actually have so they were, oh, I need to go back to this one real quick. Basically though, if you remember on this calculation, and it's the bottom line in the middle paragraph, if you do not submit your biennial pupil projections, then you will automatically fail this indicator for 2 years, because that's how many years you do your pupil projections for. Charters are not, so when it comes to pupil projections, they're strongly encouraged, because the way that the state uses the pupil projections to create the budget for the next biennium, we really want them to, but that's as far as we can go. There's not a requirement for the charters by law, except for TEA urges and strongly encourages charters to also submit pupil projections as well. But they are not held to their pupil projections like the ISDs are. The charters have another projection that they do, and they submit their estimated ADA to us in the summer going into the school year. And that's the one that we're doing a comparison with them. So we're using their actual ADA compared to their estimated ADA that they submit to us before the school year starts. And then if we pause the one for school districts, we would also pause this one for charters again. And when I say pause, we actually just grant points, not pause it. Everybody just gets points. And then for charters, ISDs, the PEMS to AFR ratio, it's the same. The only difference is the indicator number. We're comparing your expenditures above the line. So if you have transfers ins or outs or other financing resources, we don't compare those. We're just comparing the sixes, your object code 6X's, and your function codes above the line. So 11 through 81. Material compliant over controls and reporting. So if you have a material weakness reported in your audit opinion letter at the front of the audit, you would fail this indicator. It's a ceiling indicator, so you would score a C. We are adding, and we didn't get it, I don't think we got any public comment about this either, but we are adding in a going concern for this one. So if you're issued a going concern from your auditor, once in a while we'll see an ISD where an auditor will do that. GASB has talked about trying to redefine what a going concern means for a governmental entity. They haven't done it yet, but we went ahead and added it because there are auditors once in a while who include a going concern. And so from an agency perspective, it doesn't, we didn't think that if you received a going concern that you should be scoring 100 points in first. Those two just didn't really add up. And so we made a change to it here. So that would be the change for that. No change to this one. So this is your audit reports at the back, their opinions. So material non-compliance over your contracts and laws related to local, state, federal, and then of course AICPA defines that. And then this is just the publications. Did you have everything published or posted on your website? You answer this on the L1. So it's always interesting to me that there's a few who don't have everything posted, but I appreciate the honesty in that. And then wrapping it up. So that was number 20 for charters. ISDs have one more. We had a comment why charters aren't having this discussion and why ISDs are. So a little bit of a history lesson on this indicator. When we created it, this indicator was about the lag. So pre-House Bill 3, so that's how far back we're going on this. Their agency state used to pay on the prior year property values, and you're already collecting on current year property values. Boards would call and be confused. Not all boards, some boards would call, or board members would call, and they were confused. Maybe they had high property values, or getting to receive a lot of collections. The next year agency would come in and those were the collections we were using. So obviously we'd bring you down from the agency state perspective. And so we created that to have those conversations so that the board understood that relationship to when the state pays versus when the district is making their collections. Charters don't have that. They don't, that's not, there wasn't something that was impacting them. Then right after we started using this indicator, House Bill 3 passed. So that changed it because now everything went to current year property values. So we added in the changes of what House Bill 3 did so that districts could talk to them about, this is how it used to be, this is what's going to happen, here's what sell-up's going to happen, and then everything, all the other changes that House Bill 3 made. And so then we went along, and then the agency or the state started providing the pandemic hit. So then you started getting hold harmless, operational minutes adjustments, ESSER funds. And so we wanted them to have that conversation. So the genesis of this was property values, and now it's moved into a funding, just to have a discussion about funding. And that's what this change is. So for this go around, this doesn't, charters aren't going to have to comply with this. In a future first, we haven't decided at the agency if this is one that maybe we do want charters to go in and have that type of discussion with their board, because it's no longer just specifically about property values. While charters are funded on ADA and school districts have they're funded on ADA, but of course the mix between state and local and tax compression, it's we're not sure if this, if this indicator really still makes sense for charters, but it is something that potentially charters could have to start following as well. But we haven't made any decisions, but we did get a comment about it, so I wanted to just bring that up for you guys. This particular question is also answered on the L1. And so you just say yes or no. And then from a documentation standpoint, if you have it in your board minutes, your board agenda, and a budget book, we're just looking for some documentation if we were to ask for it, where you had a discussion to talk to your board about the changes. Well, and now it could be even potential changes with what the legislator's talking about, and how that would impact your district moving forward. Obviously talking to them about ESSER funds, because we're on to ESSER 2 now, that's running out at the end of September. And so having those discussions about moving costs now either all into ESSER 3, or having to start planning to shift some of those state and local costs back into state and local that you're taking out of ESSER 2 or ESSER 3 because of their pending expiration. So those are the types of conversations that we would be looking at having some form of documentation for. And then you would just answer yes on the L1 when you have that. I'm not going to go through this. It's on our website, but it's just kind of highlighting some helpful hints for predicting and determining your first ratings. One of the two things that I want to highlight on this real quickly: call the agency if you have questions about anything. We're here to help and support you guys, and so we do want to be able to help and support you, but without knowing what there is, we can't predict all 1,200 helps and supports. So feel free to call us. Any of my staff We're all available. All of our direct lines are posted on our webpage. We have several accounts, email accounts that you can use. It's all manned by at least one person, if not two. And then also you could take advantage of TASBO's template that they have for First that they've created for you to use.
I have some questions from the audience. So
Okay.
all of those proposed changes would be for what fiscal year, sir?
20. So right now we think we can push them all through for this fiscal year 22 that you're just wrapping up. Because as I analyze it and I think about it, I mean, obviously, if there's one that's going to have an impact negatively, then we may look at that one in particular. But generally, we're pushing for a fiscal year 22 implementation. Most of them we felt like moved in favor of supporting districts and charters, and so it wasn't coming down. Like, we didn't raise the days of cash on hand from 90 to 120. So now to get 10 points, you have to get 120 days of cash on hand. So we just felt like even though the numbers for the districts were already baked in, that most of them were moving to support them and help them obtain a better score. And so we're shooting for 22 unless we see some kind of disruption when we start processing the results.
All right, thank you for that. And another question we had from the audience when you were going over the required expenditure percentages, the state compliance required expenditures.
Yes, ma'am.
There were some districts that you listed as non-compliant, and somebody in the audience asked if there was a report maybe by region so that we can look to see if one of our districts was one of those on that blacklist, I guess. And the reason, I guess, is because we've had a lot of changes in CFO, so they're wanting to know if there's something that they can reference.
We don't know. It's not something that we have by region. And I'm also thinking, I don't know how, if we would release it, because it feeds into a risk assessment, which is an audit work paper for us. Because at one time we talked about having them actually just posted online for everybody to see. And then from talking to y'all as I went around the state talking about it, we didn't feel comfortable with having it just posted because there could be situations. So for an example, CTE, we're not going to capture if you purchased and built a new ag barn. I don't know why I always say ag barn. Let me come up with something else. A new classroom for catering and working to become a chef. So you built this standalone building. You put in all of this equipment. You have exhaust fans and you built the whole thing out. We may not capture that in our actual compliance review, but if you use that funding, the CTE funding to build it, and as you know, the agency, it's been a slow switch, but we've been trying to allow more of those types of things. It would show that you are out of compliance, but in fact, you're really in compliance because you have that expenditure that would support that. So from an agency perspective, we may notify you and be like, you're out of compliance. Obviously, your response to us is, we're not out of compliance. We have this CTE amount that you're not capturing because we built a new classroom or a new building for kids to be able to work on, be chefs at restaurants. So that's why we opted to not post it anywhere, and then trying to put it behind a firewall. That was getting too complicated for some of the things that we do at TEA, and it's kind of expensive for the agency, and we just don't have the staff to be able to keep up with that. So right now, we don't have anything. That's a long answer to get to. At this point, we don't have anything created like that to be able to give to the ESCs. But when we send out letters, potentially those districts can reach out to you at that point and say, hey, I got a letter. Can you help me start moving up the spending requirements so that we can make sure to spend at least the minimum amounts? because that we're specifically on our letters, we're gonna say there's no action from a district reporting back to the agency. At this point, we're trying to be just to start the notification and to reminding districts that we're looking at it and we're paying attention, and that we need to make sure to provide those supports for those kids that are needing those additional supports. So that's kind of where we're going with that.
David, one of the questions here in the audience is if you have a date of when those notices are gonna go out, an estimated date?
I don't have later this spring. Sarah's on the call. We actually rely on her
Okay.
staff to pull the data for us, and then my team will go through and we do a little bit of scrubbing and cleanup and things like that. But Sarah's team is working through it. They're actually going really fast. I needed them to pull something else for us. And so they got it to us really fast. So she's kind of spoiling us at the moment. We're just kind of depends on her staff and then when we can scrub it and then get it out. So probably I would say late spring, May timeframe, maybe.
Okay, the last question, I promise.
That's okay.
They're-
I mean, I'm here all
They're
day, so we can keep going.
They're asking if everyone's gonna get the letter or only the ones that are non-compliant.
Only non-compliance.
All right, thank you, sir.